We have some positive momentum heading into this trading day on this Tuesday, May 12th. Here's the opening bell on Wall Street. All right, and we are off to the races here on Wall Street. I don't know about off to the races, but stocks are opening higher here to start the new trading day as investors remain optimistic, even though we're getting atrocious economic data. Many people saying that this has already been baked into the pie. I want to welcome to the show Tom Essaye, Severance Report Research founder. We've also, of course, got Brian Sozzi and Jared Blickery with me. Good morning, everyone. I want to begin with a tweet that our president just came out with just about a minute ago. I want to read this to you and then get your reaction. It's on oil. Donald Trump says crude oil prices going up as Saudi Arabia cuts production levels. Our great energy companies with millions of jobs are starting to look very good again. At the same time, gasoline prices at record lows, like a big tax cut. The best of all worlds, President Trump tweeting this morning. Tom Essaye, I'm going to start with you. Is it the best of all worlds?
I don't think anything is the best of all worlds right now, to be honest. It is certainly good that oil is rallied off of the low teens and negative prices. That's certainly a positive. But, really for everybody looking at the oil situation, never mind the supply. The supply is not the problem. They can cut supply all they want. It's not going to materially impact prices. The issue is demand. When will global demand for oil return? And we should all hope the sooner the better, because that means the global economy is working again. And with regard to gas prices, it's great that they're cheap. Does anybody need a lot of gas right now? No, because we're not driving anywhere. That's the reason it's cheap. So once we start, we'd much rather be driving to work and driving to stores and driving to that and paying more for gas, right? So is it positive? Is oil getting a bit more positive? Sure, but let's not get too excited. There's still a long way to go towards an economic recovery.
Tom, I know there will be people that see the president's tweet and go out there and they buy some oil stocks this morning. But could you break down specifically what you're seeing in the trading action in the oil patch? Fundamentally, the dividends have gone completely away. Bankruptcies in the space are rising. Earnings season has stoned for this space. But what are you seeing in the trading action?
Yeah, so from a trading standpoint, interestingly, energy stocks have traded very well over the past month. In fact, I believe they're still the best performing S&P 500 sector over the past couple of weeks. Now, that said, they were completely obliterated before that, so let's not get too excited. They're still down big year to date. If you're looking to dip your toe in the energy space, we think you should stick to the majors, the really large integrated energy companies. And that's where the long-term value is, because it's going to be too hard to pick winners and losers in the exploration and production patch. You're going to have to really be an energy insider to do that. For the vast majority of us, stick to the ExxonMobils, stick to Chevrons, stick to the large integrated energy companies. They have the staying power.
All right, talked about energy. What about airline stocks? I would love to get your take on that, Tom. I know Warren Buffett has dumped all his airline holdings. Boeing CEO coming out and warning some of these airlines, even some of the big names, may not be able to survive. Are you exposed to the airline industry right now? And what would you say to investors who are and wondering what to do with those holdings?
No, I am not. But I haven't been in a long time either. I don't know the airline business that well from an analyst standpoint. I tend to stick to things I have experience in. But so the airlines are sort of an interesting case. Are they a long-term value? And I mean long-term. Certain ones are, yes, because will air travel return to pre-coronavirus levels at some point? Yes. Do I expect there to be as many airlines pre-coronavirus as there are post? No. Personally, I think it's still too early to get into this space. We have no idea how soon the general public will feel comfortable flying again. We have no idea the regulations that will be placed upon the airlines to ensure, as sanitary as possible environment. So for me, are they something to keep an eye on? Yes. And I would again say stick to the large airlines. They are going to have the cash, they're going to have the government help to stay in business.
Tom, I caught your note this morning, and you highlight some cracks starting to emerge in the markets. Where are you seeing those cracks?
Yeah, I think one of the biggest issues we have is that the sector trading is not agreeing with the overall market narrative that we are going to have an economic revival sooner than later. If stocks believed that, then this market would be being led higher by cyclical sectors, things like financials, industrials, materials. Instead, we're being led higher by a very small group of very large tech stocks. So for instance, if you look at the S&P 500 and then the equal weight S&P 500, they've diverged substantially over the past, say, week or 2 weeks. And that's because the rally is really being driven by, remember, everybody remembers the Nifty 50? It's like the Nifty 5 now. It's Apple, it's Microsoft, it's Amazon, and a couple other large cap tech stocks. So that makes me a little bit nervous that the market is ahead of itself here in the near term.
Also, what do you make of Tesla? We've talked about Tesla many times before on the show. Elon Musk has been very vocal about not agreeing with the severe lockdowns in California. He's now saying he's going to reopen his Fremont, California facility, defying state orders to remain closed. Is that a good thing for investors that he's been so vocal about all of this?
From an equity shareholder, yeah, absolutely, because they need to make cars. Right. So the sooner they do that, the better. So you want your CEO pushing the envelope responsibly. And I think that's kind of where we get into a little bit of a gray area here. What is responsible? But you definitely want your CEO saying, hey, let's reopen safely as fast as we can. Come on, come on, come on. What you don't want is, a CEO saying, well, we're just going to sit here and be closed for quite a long time until some such time as we start producing cars again. Now, from a sort of societal standpoint, is Elon Musk pushing the envelope and potentially taking risk with his workers? That's for somebody much higher pay grade than me to decide. But certainly from an equity shareholder standpoint, you want your CEO out there pushing the envelope responsibly.
But Tom, aren't you also taking risk, not to get too out there, but if he does get put in jail, and he has suggested that he's willing to go on the lines out front and be risk putting in jail, is that a risk to the stock?
Oh, sure. Yeah, I mean, definitely a headline risk. But for me, this is all sort of short-term noise, right? Tesla will begin producing cars again. They will begin, putting cars out there, and they will begin doing all those important things. But what they need to really do is they need to decide what's the demand level for electric cars going forward. What do low gas prices do for Tesla demand? What does the high price point do for Tesla demand? That to me is the much bigger issue on this stock than anything to do with Elon Musk fighting with Alameda County right now.
All right, Jared, it looks like the market just turned mixed. I have the NASDAQ down just slightly. What do you see moving us this morning?
Yeah, that's right, Alexis. Energy, materials, and staples are the leaders today, along with financials, actually. So kind of a strange leadership mix. Tech really underperforming. I'm looking at XLK, that's underwater, along with real estate and communication services. Just looking at the Dow heat map here, you can see kind of a little bit of a mixed picture. We got Microsoft down about 0.75%. And by the way, Microsoft and Apple have been the absolute engines of this rally. Something like $500 billion in market cap has been recovered because of these two companies. You take them out of the Dow, you take them out of the NASDAQ 100, you really don't have much performance to speak about. Although the NASDAQ itself, the composite is positive for the year, as is the NASDAQ 100. But just looking today, JP Morgan is up 0.5%, but that stock has been really depressed. I mean, just look at this price action here, barely recovered off of the lows. And I went back about 40 years, 50 years, just looking at when financials tend to bottom in a cycle such as ours, in the business cycle. And really, it's when the Fed is done pulling all of its measures out. And they tend to bottom with the market itself. So the fact that they really haven't been able to get off the dime, to Tom's earlier point, just tells me that there's still some things to be done before we can actually recover here. What that remains to be seen, I don't exactly know. But we're still just kind of slogging through this day by day. We'll just take a quick look at the NASDAQ here, and it's a mixed picture in terms of the big tech mega cap names here. We can see Microsoft down, as we just went over, Amazon, Facebook, Alphabet down. So we'll have to see what happens there. I did note in the pre-market that we did have the potential to get another leg up here, but that's probably going to be capped at 3,000 in the S&P.
All right. Thanks, Jared. Tom, before we let you go, what are your thoughts on the Fed starting this program today to buy corporate debt exchange traded funds? What are the implications for investors?
Shorter term, I think that it really was a needed positive. We talked a lot about in March that the Fed needed to come out and essentially backstop corporate debt because given the economic realities, some of these companies getting funding is going to be extremely difficult for them. And that's not really fair because it's a short-term hiccup. I think that in the near term, sort of people have asked me, they said, oh, gee, the Fed's buying LQD. Should I buy LQD? I think that's a little too simplistic. They're not buying that much of it. They're buying very specific, parts of it. And so I think that to me, it's more a macro positive. It gives us a more firm floor in the market, but I don't think it's going to lead to an explosion higher in corporate debt ETFs.
All right. Tom Essaye of Seven's Report. Thanks as always. We'll catch up with you soon.
Thank you, guys.
Hey investors, Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.